All right, ladies and gentlemen, I hope you're having a wonderful evening. It is not a Thursday. It is the first day of September, and we are already setting all sorts of records, and it's even crazy right now, after hours overseas, so I thought we would do a live watch list here. I might be changing some of this schedule around, but the way it all worked out, we are opening up September with a lot of volatility. It was already expected to be one of the worst months, and now we are dealing with a very crazy start. And if you watched the watch list yesterday, then you were prepared, because what we talked about with the ISM, that played out. What we saw last month played out, and literally it has been one of the worst days on the market since that August volatility. Even Japan right now is going crazy, so we have a lot to talk about. I'm going to go over one big thing that snitched today, and it has to do with the data. And pretty much, long story short, by the end of this video, I'm going to give you a really straightforward prediction on what is going to happen with the non-farms, because something showed its hand today, and this is what we discussed yesterday on the watch list. But go look at the NASDAQ. It was down 3%. The SPY closed down 2%. The Dow down 1.5%. But if you recall, remember, the SPY didn't go down 2% for like 7 months, and now all of a sudden we're getting that volatility. So I'm going to go over that, and then better than all of that, depending on who you ask, I could give you a very solid macro indicator, but depending on your crackhead nature, I also have a play, $900 to $1,000 initial investment, and the max reward is $100,000. So I have a cheap volatility play, and there's many ways you can do this play, and I'm going to show it to you, but no joke, no exaggeration. I mean, literally, even in 2020 when we had a lot of volatility, I busted out some of these plays, and we did pretty good with them. So here's the deal. They're going to be very low probability, low risk, but with what the VIX did about a month ago, and now today being the first day that the VIX went crazy, I don't think that it would be something bad to look at. And at the very least, I'm going to want some cheap insurance plays. So absolute gambles, 1% probability, but if they hit 1% probability, you are going to ring the register. So we're going to go over all of that. I have that, the keys, the plays, what I did today. I even made a trade right before this started. So at the end of this video, I will tell you a trade that I even made right now, because there's stuff going on, man. So welcome to September. I hope you're locked and loaded. My people on the recap, you guys are going to have to bear with me here, but like I was telling the guys on the live, man, I have been liking some of these live watch lists, and if I don't do it live, I may have to put the watch list out a little later, because I'm not going to lie to you, I'm post-gym right now. I've been changing my schedule around. I've been getting more work done, different stuff. I've been going to the gym, and it has been absolutely glorious. So that's why it's there, and then I'm stalling, because what I also want to remind you of is that we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning. Don't ever forget that, okay? But that being said, before I get into it, before we talk $900 into $100K, before we talk about, I told y'all, man, we have a crazy indicator. I'm about to predict the non-farms. Oh, yeah, that's what we have a crazy watch list. I'm glad we're live. Before we do any of that, what's going on, baby? How we living? How we living, baby? How we living? Good evening. What's going on, Dago? Daniel, Nate, Dirty Bar, Joe Rice, Caballero, Crazy, Foghorn. What's going on? How we living? What up, Anzel? What up, Amir? Michael Knight. El Chaparro, baby. What's going on? Oh, my goodness. Good evening. Hi, dear. Marcus Hanlon, baby. Oh, Nate, baby. You love the live. Oh, representing the Twitch. Let's go, baby. Shout out to everybody. I hope y'all ready, man. This is going to be a good one. So like I said, I'm glad that we are live right now, and, we'll see where this all takes us. So right off the bat, without any delay, I hope you like the video. I hope you love yourself. But here is the deal. Do you guys, if you watch yesterday's watch list, you love me. Because I gave you a really big signal, and even today, right when the ISM came out, this was the set-all be-all. So did the market drop 3% today? Did a lot of things happen? Yes, but that's not what I'm concerned with. I am concerned with how we got here. You could blame a lot of things, but this is the weird part about all of it. We have two separate things that we have to juggle. Number one, the ISM was the snitch, and this is what I brought up to you guys yesterday. If you recall yesterday's watch list, I even had it up. I mean, I'm pulling up the keys on it right here. I said ISM is going to be the secret. Even though the non-farms was big, this actually snitched. And why? Because this is what happened literally a month ago. So, and then here's the deal. Not only was this an awful start to September, the last time we had a bad start to August, that volatility we dealt with about a month ago, it started like this. It had the ISM, but I got caught off guard a month ago because I didn't really think the ISM mattered that much with so much big data on the schedule. I was paying attention to the big data and I didn't pay attention to the ISM, but the ISM did what happened today. ISM came out and the market had an outsized move and everybody was scratching their head asking why we moved down, and it was the ISM. So why I brought this up to you yesterday, because a month ago and pretty much over the last, 65 years or so, we could call it, there has been a strong correlation between the ISM manufacturing and the non-farm payrolls. So the ISM that came out today, that's why I was saying pay attention to it. The ISM manufacturing, it came up a little bit, but even last month, if you come down here, that 46.8, let's go back to that chart that I have, 46.8, what happened? Last month, when the ISM dropped, the non-farms that came out on Friday, that ended up dropping, and then people got nervous. So the general idea here, the first part of everything, is that the ISM, even though the jobs data is delayed, and although I think it's a lot of BS and the BLS is incompetent and there's a lot of other things going on, when it's all said and done, the ISM still has a high correlation to what that data has been printing, regardless of the revisions or anything of that nature. The correlation has been very high for a long amount of time, and that's why here's the deal. I think that's why you have your reaction today, because the algos picked up on it. Just like they did a month ago, the algos got this data, the ISM manufacturing was low once again, and they started selling off. So that being said, I'm going to go over what my prediction is with the non-farms now, but here is the deal. Beyond just what happened with the ISM and how that played out today looks a lot like August and the beginning of August. If you guys don't recall, it was also a week filled with jobs data, and then you had the VIX going crazy, and then we had a hawkish Bank of Japan, and all these other things started happening, and literally it's doing it all again. We are starting off the month of September, the worst since 2015 on the S&P 500, the worst since 2002 on the NASDAQ. So you're doing this awful start. We're getting this jobs data. Once again, the ISM is leading the way down, panicking everybody. And then last night, the last couple of days while we were on holiday, you literally had a hawkish Bank of Japan. And even as I'm talking right now, the Bank of Japan, the Nikkei is down by 3% right now, and it's dropping, and then you're having the dollar bond reaction. Everything is literally playing out. Even the VIX up 30%. It's all playing out exactly how we started off August. So we don't know what's going to happen because, again, even August dropped for a couple of days and then rocketed back up. But it's very hard to ignore the similarities. We kind of chilled out. But, yeah, it does smell like volatility. It's kind of like when it rains, and that smell. But it's the crazy part. There's just so much parallel between how we opened up August. So I would keep your head on a swivel. That's why I made a couple of the volatility plays. But once again now, I think exactly what we are doing now. It's again, I think it started with the ISM, and then the next couple of days, that's where we're going to start watching, the same data sets play out. So let's talk about that a little bit, but leading into the next key, before I get into the play, I'm going to share with you the exact play that I did. But one, we're going to go over the data and what you need to watch for this week, because if it does play out like August, you guys better be ready. And now here's the deal. If you want to play any of these plays, like if you react fast enough, you could get some good plays. I'll even share something with you at the end of this video, and it's kind of word that you don't really have to be too predictive of any volatility. But if September does play out, remember we've talked about it being a bad month. We have Powell. We have so many things that could happen this month. And again, the yield curve, the shift, there's literally so much riding on this month. If we are going to get any sort of volatility, I honestly think right now debit spreads are the answer. So I'm going to share my play with you, but it's very simple. The butterflies, you can't really find them the same way that we found them about a year or two ago. I don't know if you remember those plays. They hit. They were free. You put down money and you made $10,000 with zero investment. It was a wild play, but nowadays those option chains, they don't offer the same difference anymore. It does not exist anymore. I've looked. Believe me, I was even looking this morning. Again, even the ISM, right when that data came out, I told you about it yesterday. We made a trade on it right when it was live. I didn't go for the SPY. I shorted the bonds and I hit that play and then I covered it, but the real money was on the S&P. But I was looking for these volatility plays, and when it was all said and done, the play that I came up with was debit spreads, and these are the only ways that you could pretty much play the volatility, have an exit, but still lower your initial investment, because that's the problem. When the volatility starts to break out, you don't want to be spending hundreds and thousands of dollars for low-quality contracts. If you could do a debit spread, that's how you could get in the game for a couple of pennies. So I'm going to show you the play that I made. It cost about 10 cents a contract, but the first play I was going to do with less time, there's a play you could do with like 2 cents. So when it's all said and done, I think if you cap the gains with a large quantity of contracts and lower that price, and that way I think you could play the volatility and take advantage of the volatility. You could get close to the money and let the high volatility prices, the VIX going crazy, fund the price of other ones. So that's something I'll talk to you about, and that's why I'm even saying now, even with the data moving forward, you're going to have a lot of opportunities to sniff out whether or not we're going to get volatility this week. We have a shit ton of data. It's literally going to be ADP or the jobs openings, JOLTS jobs opening tomorrow, ADP private payrolls on Thursday. Remember, today's already Tuesday, and then the non-farms on Friday. Every single one of those events, it's going to now offer an opportunity to unleash volatility and play out like we saw at the beginning of August. So like I'm saying here, you got to watch out for it, because I would be watching for this same template of how we started August. The only difference last August, this August, when we opened up with volatility, the JOLTS jobs opening actually came ahead of the ISM manufacturing. So this time it's flip-flopped. So if you don't understand why that's kind of funny, because I want you to take a look, and this is to give you an idea about tomorrow, because remember, whatever happens with the data, everybody is going to price this in to what people are expecting for the non-farms. But take a look. You see this gap up on October 31st or July 31st? I can't even talk. That was the JOLTS. And then the next day was the ISM. So look at what happened here. Now we have the ISM, same big-ass candle, because everybody looks at the correlation between that and the non-farms. And then now tomorrow we get the JOLTS. So the implication, I hate to break it to you, even though we're talking volatility plays, if that JOLTS jobs openings comes in positive tomorrow and the JOLTS jobs openings increases but not that crazy and it's favorable, I think the market might be able to go up, believe it or not. So that's something that happened last month, and then we got smacked with the data, and then literally it's going to be ADP and then whatever we get on non-farms, and then if Japan gets in the way. So I would watch out for that. It's either going to play out a lot like the beginning of August, or it's going to play out completely different, and then you're going to get pump faked a couple of times. So I hope you're ready. But Chatadonia, I hope you're locked and loaded. I hope you're feeling good, but let us get into the play. So, right off the bat, man, I only made 2 plays today, and I only have 1 play, SPY debit spreads. I'm going to go over the one that I made here today, and it's very, very simple. The way that I'm looking at it, I think that these ones are, well, this is the play. It hasn't hit yet. We're going to find out if it does, but this is how I plan to grab any volatility, because if I'm not playing the bonds or the yen, this is what I'm going to go for. And even today, right when the data did come out, like I said, I shorted the bonds. I made a couple of $100 on it, and then I closed out of it, but realistically, I should have just taken a short on the SPY. But long story short, let me not talk too much. Let's open it up here. Here's the debit spread. So I'm going to show you a couple of them, and then I'm going to show you the one that I did. So I actually opted for time, and then I got filled between like 9 and 10 cents. So it was between $9 and $10 a contract. I bought 100 of them, so it was $900 to $1,000. And now here's the deal. I'm not going to babysit you on these plays. Do I think you should buy these plays? No, I think you are going to lose money. This is an insurance play, and how low of an insurance? The only way you make $100,000 is if the S&P goes to 400. So is that batshit insane? Yes, it is, but also that's where you were in November, give or take. So I don't know. You tell me. It's like batshit insane, but not really, but it is, but it's not. And then you have till October. That's what makes it batshit. You have a month. You have a month to unwind 8 months of market gains. And it doesn't even account for the election. So you could probably lose on this. That's to get the max gain. However, if there is more downside, a lot of you are kind of hesitant. I do think the contract value will go up if there is a volatility spike. Long story short, if we do get a volatility spike, though, I think these contracts will go up in value, and I think there's cheaper ways to do it. So I started off with these ones, and literally I grabbed a 410 put, and then I shorted the 400, and literally I went $10 apart at the same at different time frames. So I did October for now, but what I'm trying to say is, like, if you go to September 20th and then go to October, just go literally $10 apart, and you'll notice there's different contracts. Pretty much if you do the same range for September, then you could get it for like $2. That was the first play I wanted to do, but the way I was looking at it, might as well get to October. And then the only thing I'm looking for, do I think that these plays will hit? No, but I do think that if there is a spike in volatility, I think these plays will give me a little bit of protection on the SPY side, just in case, because again, I have gotten rid of any of the other like yen plays and all of those other futures that we were looking at. So yeah, but SPY, I think debit spreads are the answer here. That's what I noticed shopping around, though. Do I think you should do that play? No, but I do think if you wanted to buy anything that is betting on the market going down, I would probably do a debit spread, i.e., I would cap your gains, make sure it's worth your while, but I would take advantage of lower premiums, higher odds of hitting. So again, literally, you guys got to realize it, because when it's all said and done, why would I do that play? Because if I wanted any other play for October and I wanted to spend 10 cents a contract, I mean, literally, we are talking, if you thought 400 is insane, I mean, there's no way you could play SPY puts for 10 cents. Does that make sense? So even then, there's better. You could do this depending on whatever price you like or whatever budget. So you don't have to do 10 cents. You don't have to do 20. You could do less. You could do more. But the general idea is when the volatility rockets up, try to sell some premium, take advantage of it. And I'd rather take the fixed gains rather than any of the higher price with paying higher premium with unlimited return, because I think all of the premiums are going to be here today and then gone tomorrow. So the play is a debit spread. I did a 410 put and then sell the 400 for October. It was about 9-10 cents a contract. Again, you only make money. You only make the max gain if the SPY goes to 400 by October. But if the SPY does go down a little bit and we get some volatility, these plays do have the ability to go up there a little bit. So it's about a 1% probability. Do I think you should do the exact play? No, but I do think this idea will probably open up some doors for you. I think if you look for debit spread, so again, if you are shopping and you can't really find a play to make and you're like, man, I want to play the VIX, I want to do this or that, and it all seems expensive, I would explore some of the debit spreads to see if you could get a good mode or if you could get a good price for it. So, yeah, but that's all I'm going to be looking at. Literally, SPY debit spreads. That is the number one thing. And then besides that, I think, did I show you guys this? Again, here's the ISM chart. I had these up and the non-farms. And again, oh, wait, I didn't give you guys my prediction, actually. So before I open up the door to any questions, to go back to the non-farms, pretty much I think the non-farms are going to be between pretty much, wherever we were at between October and December. But the ISM, oh, you don't see it. I need to show you the other chart. Here. So pretty much after extrapolating from the ISM, and if you go look, ISM in October, November, December, it was low, and the non-farms, the non-farms were low, but then it had that boost there in December, but then you had a couple of the changes, and then finally it started to drop back down again. So the way I'm looking at it, I think last time you had an ISM print of like 47.2. It was in between October and December, and I think we're going to get a reading on the non-farms right around here. So I don't think it's going to be 290, and I think it'll be lower actually than 165 because again, last time we had 114, it was a little bit of a bounce, but the way that I'm looking at it, I think it's going to be right below 160 and then above 120 for the non-farms. So that's what I'm looking at. I think that's going to be the sweet spot. And then if the ISM services collapses between then, that's another thing I forgot to tell you about. Thursday, you're going to get the ISM data. If that starts to give up, then we will also get clapped as well too. And then that'll factor into everything else. So we'll see how it all plays out. But Chattadonia, I hope you're locked and loaded. I hope for the people on the recap, that was 20 minutes. So if you are watching the recap, we talked about the ISM. I gave you my non-farm prediction. We went over the $900,000 to $100,000 play. It's an insurance play, so calm down. Some of you get a little excited. It's insurance. It's insurance, but that is all I have for you. If you have anything, now is your time. Speak now or forever hold your peace. Do you guys have any questions? You're here right now. You're live and in the flesh, baby. Oh, and there was news. NVIDIA got a Department of Justice probe after hours. About there was like a subpoena. People kind of freaked out, but not too crazy. And then that's about it. I wasn't feeling Dollar Tree or Dollar General, not yet. I do think eventually that could be a good one for the long term. Oh, I sold a covered call today too. I sold a covered call on Abivai. So for the long term, and now based on the covered calls and my deposit coming in, I no longer have margin. So I'm very excited. But I sold an Abivai January 626 270 call for about $395. So yeah, damn, someone sold it for $3. That's crazy. So yeah, I did that play. And that was for the long term. I did a NVIDIA put for the random, and then believe it or not, my random, remember those earnings play NVIDIAs? They actually came back today. So if NVIDIA drops on the DFJ tomorrow, then that one should actually be good. So we'll see. I do have old videos on the debit spreads. Yeah, the max loss on that debit spread, since I did 100 of them, the max loss is $1,000. So it's pretty much 9-10 cents. So if you spend 10 cents, every $10, you're going to be spending $10 a contract. So that's your max risk if it loses. So the last time I did one of these plays, it was free and you got paid. You didn't have to spend money for it. But this one, you do have to spend money. If you're wrong, you don't get paid. But if there is volatility, I think you should be able to sell it for a little bit more than that 10 cents that it's going for now. Jesus Christ is King. Amen, Tito. What's up, baby? Good evening. Tell up. The yen buying. Honestly, the yen buying is good. That's stopping the yen for now, but what they were talking about yesterday was pretty hawkish. They do seem like they're on the plan, and then all of the data has been pointing to a more hawkish Bank of Japan, and people have been talking about the carry trade not being over, and that's that's what's kind of been, feeding into the yen and everything for the last day or so, even into today. When will we know soft landing or hard landing? Very soon. Pretty much, I would say in the next 6 months, or 6 months after the rate cut. So 6 months and 2 weeks. So if Powell does cut rates, at that point, from that point until the next 6 months, I think the economy is either going to chug along and very well follow through with trend, or we're going to witness a major reversal. So I'd say 6 months after the first cut, that would be a window I would start to put on there. Maybe even sooner. Again, that was the chart that I brought up on the watch list yesterday. I hope you guys paid attention to that one. We did talk about it here live on stream, but some people would argue we're already in a recession because the last 7 recessions, if you took the private payrolls and excluded education and health, anytime that amount of payroll growth fell below 40%, the economy fell into a recession, and that's literally where we are at right now. So like I'm saying, maybe we fall into that data faster than we expect, or maybe it's already at our doorstep, hence why your boy is cutting rates already. TLT, I've made a play on bonds right now, but I'm not in TLT. Again, I talked about it the other day. I said it, man, if you want a TLT play, don't go for TLT, go for the yen. Go for the FXY. So that's literally, that's the easy. If you want one of those crazy plays where you could just buy and hold and not think about it, then FXY. The only downside about FXY is that it's unlevered and you could only make 30 to 40%. So it's non-levered. So that's the only downside. But that being said, I might as well tell you, I'm also in a yen play that I made right before I started the watch list. So, yeah, I bought the yen. So as the Nikkei was down 3%, 30 minutes ahead of the watch list, I was up $300 on it. Now I'm only up $100. I'm probably going to sell out of it before market open tomorrow. No, I went long on a yen future. So, because the Nikkei is down by 3%. And then I noticed that the yen was I bought it when the yen was barely green, and then the yen rocketed up. So I had a good position on it. I still like where I'm at with it, but I do think if there's a chance, we might play into some of how we opened up last month, and then at the very least, if Japan is bad, I think the yen will hold up. They do have yen minis. You could go /67, or not 67. What is it? J7, I think is what it's called. Yeah, I think J7. That one, and it's cheap. I think it's $400. So I'm already up a little bit on it, but I think, again, I do think, if this plays out like the beginning of August, there's going to be a shot on the yen in the short term to flip. So get familiar with it. Don't go too crazy. Again, the moment you add leverage, this play becomes a lot more shaky. But without leverage, again, I think FXY is it's a no-brainer. I honestly think it's one of the easiest trades out there right now. If you don't want to actively trade it, if that's the case. So not a recommendation. You will lose money, but that is all that I did. But great questions, my friend. What else we got? Add more levers like Minecraft. I am getting NBA 2K25. Yeah, I'm going to be playing. I think it comes out tomorrow at market open. So right before, I'll get a game in, I'll wake up early like I was a kid. No, I never did that. We used to camp out for Madden, though. That was the good old days. We used to go to GameStop and game crazy, and we would wait outside to pick up Madden. Y'all don't feel me. You overslept? I mean, it is the evening. We do have I kept DVR on since some of you guys wanted that. Will the non-farms have revisions? Yes. So the non-farms should come in lower. That's the ironic part. So remember, the seasonal benchmark, it came in lower by 800,000. That was the big deal about a month ago. And that means we're probably going to get a low number. And then factor that in to the ISM manufacturing still falling. I think all of that says we're going to get a low number tomorrow, or on Friday. So we'll see. And then again, even the JOLTS jobs openings and ADP every day. So tomorrow and then Thursday and Friday, every single day, we have one set of jobs data, and the market is going to react. Again, I think it's already there. Bad news is bad news. Literally, that's the problem. If the jobs, like we're saying, the question was just, are we going to get a hard landing or a soft landing, right? And I said we'll find out very soon, but like we could go across some of the other data and see any of the other stuff comes out. I mean, if any of the data craters, we are going to have a problem. I think you might have unlocked another chart. No. That's it. But let me, I guess I could give you guys a hint for tomorrow. There's one more thing I could throw in here. Should I throw it in now? I should throw. What do you guys want to talk about? I could give you. We could talk about rate cuts, or we could talk about commodities. Which one do you want to talk about? This is your chart you have yet to unlock. You got to pick one. I'll show you GDP. You do have Canada rate cut tomorrow. Commodity. Can't you see? Sometimes commodities hypnotize me. I just love your commodity ways. This is how you broke and you so paid. All right. Let's do it. So here it is. Secular bull market in commodities is just getting started. And this chart should keep you up at night, because it keeps me up at night. This is what I've told you as part of the hard landing, soft landing debate. I don't know if you guys remember this, but don't forget it. I'm glad there's a lot of you guys here right now so you could remember this. Just remember, if we get a rate cut and commodities rip, I think we are going to have a problem. I think that will lead more to a hard landing. If we get a rate cut and commodities stay like subdued and they don't go crazy, then I think that is gonna hold the odds of a soft landing. I think maybe your boy Powell might have pulled it off, but I've been saying this for a while. It's very, very simple. If commodities snap, then you have a problem. There's no way around it. It's weird because things are different than the past, but it's just one of those things, man. That's the thing, because here's the deal. No matter what, like I've even given you guys theories about Kamala and Trump, right? But here's the deal. Why this is where commodities, they could be tricky. They could fool you. But there's one aspect there's something why I respect it as an indicator. Let's see. I don't know if you guys look at the chart. What do you see? The chart is telling you, man. The chart is telling you. No matter what. It doesn't matter. Kamala or Trump, commodities are going to be an answer when it comes to soft landing, hard landing. It's crazy. It's crazy. There's something. You got to respect it. Whether it's Trumpala or not. The commodities, they have a way to communicate. I'm going to let it soak. It's right in front of you. Literally right in fucking front of you. Can't make it up. It's like I put the answer right in front of you. You're staring at it. Here's the deal. Both of them. Inflation, deflation. You see why I like the commodities as an indicator? No matter what happens, they're going to respond aggressively. Ta-da. So whether you get hyperinflation, whether you get deflation, oil's going to tweak out somehow, right? Gold is going to tweak out. Copper, iron, all of these things are just going to start tweaking. Food even, and even, like, again, agriculture and all of that. So whether it's Trump, whether it's Kamala, doesn't matter. If any of them do any crazy things, or we start getting into more volatility, or again, the rate cut and all of that, then ta-da, that's the problem. So that's why I'm saying here, whatever happens, with the rate cuts here, that is going to be the answer. And then the fact of the matter is, when you look at what's going on right now, I mean, the commodities, they're not really moving, but it's like they're in this weird stage back where they were at kind of at the 60s and the 50s, but we just had an inflationary wave a couple decades ago. We had a little bit of inflation, then it came back down, but there's a long way for commodities to run right now. So that's why I'm scared. But if the commodities continue this downtrend, your soft landing is going to be good. Again, even then, take a look here. Like right here, after commodities fell off, this right here. I hope this was one of the most glorious periods for a long-term stock. The stock market ripped when that happened. So if that's the case in commodities, if we get low rates and low commodities, I think you're going to have a golden era. And if you think you love the long term, you're going to love it even more. But then if the commodities run up, I think you're going to have a 2009 or like a 1973-esque shock to the market for a couple of months to a year. Ta-da! So welcome to hard landing or soft landing, baby. We still don't know. But yeah, I got one more chart you guys didn't unlock. We'll have to see if we stumble across it tomorrow. But there it is, my friends. I hope that one helps out. I hope you got to learn something. Is there any more questions? We went over the play, 900 to 100K, inshallah, but you'll probably just have a good insurance one. We talked about the ISM predictor. We have a lot of data. What else we got, baby? You need anything? Are we selling? Well, the Japan's not doing good right now. We'll see. I think there'll be a little bit more to it, but tomorrow depends on the jolts. And then, like I said, last time the jolts actually came in good ahead of the ISM, and then we had a pop. So it was very, very wild. I spent $900 on mine. So I spent $900, and then if it hits the low end of the put, max gain is 100K. So, but the SPY would have to go to 400 by October. So it's possible, but it's not probable. But I do think if the VIX goes crazy again, we could at least benefit off the premium. The wheat premium, yeah, that's the problem with going with options. So I thought I was going to go with 3 different plays, and that's why I was going to do options, shares, and futures, but then I got turned off after the Canadian government stepped in, but now it's still going. So I'm still holding my play. I think the premium on wheat is going to move up very slow, but if we get a crazy commodity run with rate cuts or with crazy Kamala, then I think it'll hit at one point. But here's my solid advice. The first wheat pop, you might want to consider taking profits, if that makes any sense. It'll probably have a one big day of popping or like a 2 days, and then that'll be it. So speak now or forever hold your peace, my friend. Not a recommendation. God bless you. You can sell covered calls with wheat, but just be careful. Again, the commodities. And don't, can I tell you guys a story? You guys want to hear a story? Once upon a time, there was a little boy. His name was, I'm going to give him an Indian name. His name was Rohit. Okay, Rohit was a nice little boy. Rohit, he saved up his money, and Rohit worked a job, and he saved, and Rohit was such a good saver. And Rohit, man, he had a 401k, and then he saved up all his money from the 401k, working so hard. And, Rohit was just a good guy, very, very hard worker. And then one day, I don't know what polluted his mind, but then Rohit was like, oh, I'm going to day trade in my Roth, in my 401k. And then the guy on the internet told Rohit, don't fucking do that, Rohit. And Rohit said, nah, I'm going to do it anyway because I want to save on taxes, even though he only had 2 winning fucking trades. So then Rohit goes and trades in his account, and then he blows up his fucking retirement. And now 7 years of working, saving a little tenth here and there, has now been destroyed in 1 week because he wanted to save in taxes on losing trades. So but then the moral of the story is that Rohit learned never to trade in the 401k or Roth. Yeah, you ever heard that? It's called Rohit Trades His 401k. It's a story. It's a children's book by Dr. Seuss. Okay, guys, can I remind you that? Can you guys just not forget that that's what's going to happen if you trade in your 401k? You are going to become like Rohit. And sorry, if anybody's name is Rohit out there, I'm sorry for using your name. I'm sure you're a good guy, but in this invisible story, Rohit got clapped. Okay, so don't do it though. Okay, a lot of people I saw today were coming up with all sorts of ideas about making trades in their 401k and Roth, and I was not feeling it, man. So I thought it'd be. I didn't think I had to remind people of this. You know what I'm saying? Like, have you ever seen those like electricity plugs? And it's like, don't take a shower with a blow dryer, and and it's like, oh, don't go swimming with your toaster plugged in, and like, oh, don't stick a fork in the electricity plug. Those like obvious warning labels. Yeah, I never understood why, but now I get it. So I didn't really think I had to tell you guys this. I didn't think I had to warn you, but just as a, abundance of caution, do not trade in your 401k or your Roth, okay? Like wheat or Amazon or the yen plays or anything, bro. Anything that's not like a long-term you're going to hold for 10 years, bro. For real, like, it's a bad idea, okay? So just make sure you guys don't do that. All right? Yeah, it's not. No, I don't even know, man. It was wild. Cause somebody like they said it today, and then I like answered and I like told them, but then like subtly in like hearing people like talk between each other, I was like, damn. There was at least like 10 mother effers who were like, yeah, that's what I do. I'm like, oh my gosh, you guys are insane. Like, I don't know. I don't want to judge them, but like I feel like they probably like weird shit. I'm not gonna lie. Like, you have to be like, I don't know how to describe it. Like, I don't like. I have a lot of like, I don't know how to describe anybody trading in. It's a weird breed of person, bro. You know what I'm saying? Like, it's a weird, like, I don't know. Like, it's just a weird. It's just, you can't. So just don't do it, man. Okay. It's not even. It's like a weird living on the edge. It's like a living on the edge, but like in a very dumb way. Like, it's not like I can't even like admire it too much. It's not even like you're like, it's just weird, bro. It makes no damn sense. Like, and I'm telling you, I would love to show you guys, like ways to, like, there's ways you could like save on taxes, and you could have strategies where like if you really want to save on your taxes on all that, but like doing it is a very, you don't use your Roth for that. You're better off long term, the dividends, all that good stuff. You know what I'm saying? Have I seen Bones? I'm back in the day, but I don't remember the plot. Well, Chattadonia. That being said, man, any final questions? I have a video, man. I want to talk about saving. Oh man, we gotta talk about saving, bro. Saving's big, and the long term. So again, I did AbiVi covered calls in the long term. I'm really proud about that. That's it. We have no more margin debt, bro. I got myself out of margin debt by selling covered calls. That's it, bro. I grinded. I hustled. The long term got smoked today, but we out here. Thank you, my friend. Thank you. Let me know if you find a good butterfly. But yeah, so now I have $35 in cash. That's it. No more margin. No more margin, man. About forward covered calls. Ooh. Only butterfly. Well, let me know if you find one. I couldn't find one. They all suck. That's why I went with the debit spread. But shout out the long term. So again, I even talked about it today, even though like the dividend goal. So remember, I'm trying to hit a certain dividend goal. Again, I hit it. I hit 6,000. Oh, excuse me. And then MPW, they lowered their dividends, so now I'm like $100 or what, $220. I'm $220 shy of my goal, but I did the math. I collected $2,700 in premium off of covered calls. So by the end of this year, we're just shy, but we're gonna collect about $6,000 in dividends. That is all reinvested, and then I've collected about $2,700 in premium. Bill, I only made like maybe like $100 because Because I remember every time I've had cash, I kept it for a little, but then I bought other names. So like I bought MO. Remember, I'm fully invested. So and I've been like that even in the beginning of the year. I had a little bit of cash. I got a bill. I got like $3 the other day. Oh, you guys can't see it because of this. So yeah, the wire, but by Bloomberg. I don't think the commodities are gonna go up. I didn't say that. I hope you didn't misinterpret. But I'm saying I'm going to use the commodities as a gauge to determine what's going on. So if the commodities do go up, I think that's going to be a hard landing. And then if the commodities go down or stay stable, I think that will be a soft landing. Ta-da. Add NVIDIA. Oh, man. It would have to be like just a calamity. You know what I'm saying? It would have to be so ugly. So I don't know. But there's other names I'd rather top tick. NVO, Eli Lilly, Walmart. So I don't know. And NVIDIA is just up so much that there's other names that are top ticked, but they're just still not even that high as NVIDIA, where I'd rather like something like that. So honestly, I don't even think NVIDIA is on my list, sadly. It's a great name, but like I'm saying, there's just I'd rather buy IRM. I would rather buy McDonald's, Walmart, but mainly like NVO or Eli Lilly. I would rather top tick that than NVIDIA, to be honest. So 30%. Well, I wouldn't hold too much, man, because you're already seeing. I'm glad, like I'm saying, 20% cash will do a lot of damage. But I'm glad I put my cash to work, bro. My Nike, my MO. Like, MO is the best example of why you don't want to let your cash sit too much and have too much cash. Because that's what I'm saying. You could have taken that hold 20% cash. Don't let it get too much. But if you invest it in good value now with a dividend, that's it. You're going to lock in a high yield, still get paid on the money, and you can make money on the upside if everything starts to shift. So that's why I'm very happy with it. So make sure, like, again, there's a couple of names there, or if some of the value names that we like come down, I wouldn't hesitate to grab some of those. So definitely keep your eye out for that. And then let me see, does the I don't know if the other account, I don't know if it's still on margin at 90. Yeah, bro, it's crazy. So, like, again, I posted that video. It's when we started the beginning of 2023, this account was at, like, 90 or 70 grand. Bro, here's the deal. If you guys remember the YouTube, I think I have it in the video, but if you remember that, like, remember when I would show these accounts on TD Ameritrade and then it would be combined? Well, this is separate now. So let me see it. But, like, I have the screenshot of it. Let me find this shit. Yeah. Look at this. This is... Oh, yeah, I can pause it. Hold on. Oh, wait. Where'd it go? Yeah, you see this? Look. Bro, do you not see that? That's disgusting, bro. Yeah, you barely could... Bro, that's 100K. Dude, it's nuts. Bro, that was 100K on both of them. So that was this account and this account combined. It was 100K. So now both of them combined is like, what? We're like 223? Like literally right below 225? It's kind of nuts. So... but that's what gets scary, because then you're like, well, shit, it could come back right back down ASAP. So that is the problem. But, sell some covered calls, get some dividends. Good thing we got a 10-year monetization plan. If you want to sell out of it, get a long-term or buy a house, and that's it. Let me see. No, I'm $100 shy on this account. So, yeah, I can't sell covered calls. Panic hold. Amen, bro. I mean, we did that. I mean, it's crazy, though. Because like I said, even then, although the long-term looks all pretty, bro, last couple of weeks was brutal. That first week of August, it really, really got, like, knocked down. So we'll see how it plays out. But Chattadonia. I think that's it, man. I think it's time to call it. It's almost 10 o'clock Eastern. I'm going to see you guys in the morning in the AM. YouTube.com/the stock market. Get ready for the ISM, the job opening, the ADP. Literally by Friday, man. We'll see what happens. If the volatility in Chad VIX goes crazy, I hope you guys are ready to trade. But have a good night. Enjoy your rest. Know you are blessed. Finger to the sky and horn.